Okay class, so attendance muna tayo. Please let me know you're present by hitting the subscribe button and saying present in the comment section. Bilang reward naman sa'yo sa paggawa mo yan, I will be giving you a free book. So, wala namang mawawala sa'yo, subukan mo lang. Say present in the comment section below. I will be posting my personal Facebook account and you would have to message me there. Sasabihin mo sa akin yung pangalan mo, yung address mo, and then yung name ng school mo. You just try, please. Subukan mo, wala namang mawawala sa'yo. I will be mailing the book to you via LBC at wala kang gagastusin, wala kang gagawin bukod sa, syempre, pagdating sa bahay ninyo, tatanggapin mo lang yung libro and that would be it. That would be my gift to you for being one of the first few subscribers. I would have to choose from the first few subscribers. So that would be my thank you gift for you. Let's continue with the lesson. Alright, Chapter 2, Partnership Formation. Let us establish. The general principles governing single proprietorships shall also apply to partnerships as far as ordinary transactions common to both types of businesses or business organizations are concerned. Accounting for transactions like sales and purchases, cash receipts, disbursements, accounts with customers and creditors, and other transactions that may occur in either type of organizations or either type of organization is very much the same regardless of the type of ownership or organization. So, dito, sinasabi lang natin that the journal entries are the same. We're talking about accounting procedures, so not just journal entries. The journal entries, the postings, the trial balances that we create, as well as the worksheets would be the same. Furthermore, accounting procedures are normally standardized, correct yan, for assets, liabilities, revenues, expenses, regardless of the legal form of business. Tama yan. That's why we have accounting standards. Okay? Therefore, with all of this, one might be inclined to ask if there is still a need for an entirely separate study of partnership accounting. So sir, kung sinasabi mo na same lang yung accounting procedures, bakit ihiniwalay pa yung accounting for partnership? Why do we still have a separate subject for partnership accounting? Okay? Why not account it like a sole proprietorship or maybe a corporation? Okay? Sasabi natin dito, in the succeeding discussions, it would be made clear that partnership accounting exhibits unique aspects that warrant a separate study. So these unique aspects would be the reason why we are taking up partnership. Those portions which are unique to partnership accounting would be our primary focus in this subject matter. In the first chapter, we have discussed the basic concepts, nature, characteristics, essential features, and the steps, and legal requirements in organizing this form of business partnership. In this chapter, we focus on the partnership accounting issues regarding partnership formation. Among these topics are the opening entries in a newly organized partnership business, adjustment of proprietorship assets when converted into a partnership. Pwede din kasing yung isa may business, okay? At saka may income, may gustong makipag-partner sa kanya na walang business. So, yung may business, i-adjust muna yung kanyang accounts. Or the union of two proprietorships. Dalawang proprietorship businesses would come together as one as a partnership form of business. So, both of these, meron tayong examples later. Okay, take note, not just an example, examples. Madami tayo dyan later. Using one of the proprietorship books or opening new books for the partnership. So, common yan dun sa first scenario na may business yung isa, walang business yung isa. Or dun sa second scenario na both sila ay sole proprietors and then gusto nilang mag-combine into a partnership. Common yung alin? Common problem na pwedeng, ano ba gagamitin natin? Yung books mo ba? O yung books ko? O wala sa ating dalawa, gawa tayo ng bagong libro. Okay? Madali lang naman, class. It just involves accounting procedures of generally closing the book which you are not going to use. Okay? But under both circumstances, kailangan i-adjust parehas. Whether gagamitin yung libro or hindi, dapat ma-adjust siya. pero yung hindi gagamitin, siya yung isasara. Okay? Closing. Case to remember again. So yung case to remember natin sa chapter 1, I hope you have resolved that on your own. Okay? You would have concluded based on our discussions. Another case. Robin and Gabby are partners in an automobile dealership and auto repair shop. Robin was the active manager of the business, but Gabby had supplied nearly all the capital. Aware that the firm was quite profitable, Robin devised a scheme to become the sole owner by buying out his partner. Masama ugali nito si Robin. Pinagbabalakan ng mali si Gabby. In order to persuade Gabby to sell his interest at a bargain, naisipan niya to deliberately begin falsifying the accounting records and financial statements in a manner that understates the earnings of the business para mawalan ng gana si Gabby. Ayan. Nako po. Much of the revenue from auto repair work were not recorded at all. Depreciation expense was overstated. Ending inventories were understated. And the cost of new items of plant and equipment were charged to expense. Mali nga naman. The result was a series of income statements showing that the business was operating at a larger loss each month. Siyempre, saan pupunta yung ganong klaseng reporting? Faced with these discouraging financial statements, Gabby became pessimistic over the prospects of the business and, ayan na, mukhang magtatagumpay si Robin, was thinking of selling his interest to Robin at a price far below the balance in his capital account. A friend suggested that before selling out, sabi niya, Gabby, pa-audit mo muna bago mo ibenta yung share mo or yung interest mo. An audit was performed and revealed that the business was in fact, syempre, nakita that it is highly profitable. When confronted by Gabby with the auditor's findings, Robin napahiya with the rebuke from the partnership and Gabby became the sole owner and later converted it into a corporation. Ayan. So, case to remember, wala naman siyang hanging question. Di tulad ng ating first na case to remember wherein pinag-isip ka kung ano ba talaga yung isa doon. Is he really considered a partner or not? Partnership accounting. Although accounting for a partnership is very similar to accounting for a sole proprietorship as already mentioned a while ago, there are differences. Ito yung mga unique aspects na tinutukoy natin. Instead of owner's equity, partner's equity is the technically correct term. In addition, instead of only one capital and drawing account, it is necessary to maintain separate capital and withdrawal accounts for each partner. So, ibig sabihin, there are as many capital and withdrawal accounts as there are number of partners. On the other hand, okay, the purpose of which is to properly reflect transactions affecting relations among partners as well as partnership business. Correct. On the other hand, and in contrast with the corporation, the stockholders' equity accounts do not correspond directly to capital balances found in the partnership financial records. Okay? Do not correspond directly. The various equity accounts reported by an incorporated enterprise displays a greater degree of structuring and are more precisely defined. Sabi dito, sa corporate form of business daw, mas detalyado at saka mas established yung structure ng shareholders equity doon kesa sa partnership. Malalaman natin dito kung bakit. Okay? Next paragraph na. These characteristics reflect the wide variety of equity transactions that can occur in a corporation. Ito na actually yun. Okay? Wide variety of equity transactions. Corporations are known to be large on equity transactions. Madaming equity transactions na pwedeng maganap sa corporation, not unlike in a partnership form of business. To provide adequate information as well as meet legal requirements, corporate accounting must provide for details about numerous possible equity transactions and account balances. For example, the amount of a corporation's paid-in capital is shown separately from the earned capital. We'll study all of this when we reach the topic corporation accounting, syempre. Sa latter part ng part 2, itong librong ginagamit natin. Partnership accounting only provides a limited amount of equity disclosure, okay? Primarily in the form of individual capital accounts that are maintained for each partner. Ito yung sinasabi natin kanina. Unlike a corporation, disclosing the composition of the capital balances is deemed unnecessary since partnership have historically tended to be small with equity transactions that are are madalang na komplikado, sabi dyan. So, na-explain na natin kanina. Unlike a corporate form of business which has complex equity transactions and are large on equity transactions, partnership forms of businesses do not have that complication. Usual lang naman naggalaw sa equity pagka merong pinapasok na amount galing sa income. Ayan, pagka close yung income dun sa capital account. Pag may mga withdrawal, ayan, pagka may umalis, kailangang mag-compute ng updated capital accounts. Pagka mayroong parating, ibig sabihin new partner, yun lang yung galaw dun sa equity or capital accounts ng partners. Although it has been mentioned kanina that the shareholders' equity does not equate to the capital accounts of the partner.
When teachers like me teach in front of a live audience, we derive satisfaction to some extent from the interaction with students. Yung mga simpleng pagtawa mo sa mga jokes namin, they mean something to us. They make us happy. But teaching in front of the camera is a different thing. We don't even know if you're there. We don't even know if you're listening. So, a simple like dun sa ating video or a simple present, sir, nandito po kami, nakikinig, we are watching, sir, will inspire us. When teachers like me teach in front of a live audience, we know that you're there. But teaching in front of the camera is not merely sharing our content. It means sharing our time, our devotion, and above all, our passion. So, yung simpleng pag-subscribe mo sa amin, it lets us know that you are there and we are here to continue what we are doing. So, ngayon pa lang, nagpapasalamat na kami dyan sa yung subscription. It inspires us. It inspires me to wake up every morning, prepare discussion materials, and continue what I am doing. So, thank you so much. Please continue sharing and liking and subscribing. Thank you.
The balances of these capital accounts measure each partner's interest. Na-mention na din natin yung interest sa ating part 1. Kung ano ba ibig sabihin yan? That is share in the profits and losses, pati yung kanyang capital equity in the book value of the net assets of the business. Partnership accounting will cover the procedures in the following. We also mentioned this in the introduction in our first few meetings. Okay? Partnership formation, operation, dissolution, liquidation. Partners capital account. In a sole proprietorship, there is only one capital account, there being only one owner. In a partnership, there are as many capital accounts as there are number of partners. Ganun din for drawing accounts. The balance of the capital account represents the investment of a partner in the partnership. It is debited and credited for the following transactions. So, being a capital account, alam naman natin, it has a normal credit balance. So, credit for original investment, additional investments, share in the profits. So, consequently, opposite, share in the loss. Permanent decrease in capital such as, pag walang drawing account, pwedeng direkta na i-debit dun sa capital account for deduction. Shown below is a basic comparison of the capital accounts of a sole proprietorship and a partnership. So dito pinakita natin class. Alright? Kahit very self-explanatory, sole proprietorship, tulad ng sabi natin, only one owner. So, isa lang yung capital at saka isa din lang yung withdrawal account. Okay? For partnership, 2 or more individuals owning the business. So, dito dalawang owners, si Punsing at saka si Ben. Okay? Tigisa sila ng capital and withdrawal accounts. The equity portion of the statement of financial position of a partnership business lists each partner's capital accounts separately. These capital accounts can be affected by many different events such as contributions from partners as well as distributions to them, earnings, and any other equity transactions. So here we have assumed figure for liability 75. Here capital account, okay, 158 considering the withdrawal there, and this one would be 145 for the second partner considering also the 15,000 withdrawal. So 378,000. Drawing account. The drawing account is a temporary account and is periodically close to the partner's capital account. So acting in that capacity, it may be called a suspension account, okay, using that definition or by that definition. The statement of financial position of a partnership therefore will present only the capital account balances of the partners. Tulad ng sabi natin dito, naka-net na yung capital against the drawing account. The drawing account established for each partner is debited and credited for the following transactions. Okay? Debited when periodic withdrawals to the partnership assets up to specified amounts are made. Closing of the balance to the capital account. We'd have to debit the capital and credit the drawing account to close it to the capital account. The drawing account may be left open, not closed to capital account, if the partners have not agreed to make the balance a part of the permanent capital. Should the partners decide to make their drawing account balances as part of their permanent capital, the drawing account should then be closed to their capital accounts. Tulad ng binanggit natin dito kanina on how to close the drawing to the capital account. In either case, the individual partner's capital and drawing account balances are combined in reporting each partner's total interest. So, for purposes of determining partnership interest or partner's interest, it must be combined in the statement of financial position, balance sheet. Partner's loan account. This account represents a liability of the partnership to the partner. So, ingat ka kasi in the problems, minsan ang gagamitin na terms ay loan to, okay? Loan by, o kaya loan from. So, ingatan mo kung anong binabanggit doon. Ang nagpautang ba, is it the partner to the partnership or is it the partnership to the partner? Because kung ang nagpautang yung partner sa partnership, liability yun ng business. Pero kung ang nagpautang yung partnership doon sa partner, then that is a receivable on the part of the partnership business. Being a loan from the partner, there must be a term for its payment. If the loan account is opened when dissolution comes, it shall be paid together with other liabilities of the partnership before partners are paid back the remaining capital. Well, class, in terms of liquidation naman, okay, pagka nag-dissolve at saka eventually nag-liquidate at may binabanggit na sa dito na bayaran, meron kasi tayong order of priority dito. So, as we all know, unahin muna nating bayaran yung outside creditors. So, kung merong natira, okay, then inside creditors naman. Kung merong pang tira, ay yung interest, dun sa, yung capital interest. Kung meron pang tira, yung interest naman ng partners with regards undistributed profit kung meron man. In that order, okay? Partner's receivable account. This account represents an asset of the partnership. Meaning to say, yung partnership naman dito ang nagpahiram sa partner. It is different from the drawing account of the partner. This account is used when a partner borrows from the partnership. Correct? Partners borrow from the partnership. So, yung partnership nga nagpautang. With an understanding that it shall be paid by the partner and not charged against his share in the profits of the business. Okay? Kasi kung i-charge dun sa kanyang interest, i-offset mo siya dun sa capital account, which we do in liquidation. Alright? If it is the intention to charge the amount borrowed against the share of the partner in the profits, the same shall be charged to the partner's drawing account, which eventually will be close to the capital account din naman. Okay? Alright. Next, opening entries. In the first chapter, we have learned that partners may invest money, property, or industry into the partnership. When a partnership is organized, the opening entries will simply involve debiting the assets, usual way class, contributed, and crediting the capital account. Tama? Parang sa sole proprietorship business natin. Service, merchandising, at saka manufacturing. The opening entry in this is the same, okay, as in a single proprietorship. The only difference is that there are as many capital accounts credited as there are contributing partners. So kung madami sila, edi madaming credit sa capital accounts. Cash is contributed. What if cash is contributed? Madali lang. Yan ang pinaka-simple situation, yun ang sabi. Simplest situation that may happen pagka nag-organize ng partnership, pag binigay cash. Okay? Partners invest only cash amounts to start the business, cash contribution. Let us assume that R and S agreed to form a partnership. Reyes invests cash of 300,000 and Santos invested 200,000. The entry to record the investment of Reyes into the partnership business would be debit cash, credit the capital accounts. Of course, which will be supported by official receipts, tama, as we have studied in chapter 5 of the book 1, yung part 1 natin. As evidence na tumanggap yung partnership ng pera galing sa mga contributors or the partners. Why? Because the partners are distinct. They have different entities from the partnership business. So this is our entry. What if naman money and property are contributed and property are contributed? When only cash is contributed, walang problema since cash is always valued at face value. So kung magkano lang ang kinontribute, yun ang i-record mo. More often than not, however, partners transfer non-cash assets such as inventory, land, building, equipment, and others to start up the business. Okay? Let us assume Tan and Uy decided to form a new partnership wherein T contributed cash of 300 and furnitures with a fair market value of 250. The said furnitures carry a book value of 200,000. Si Tan yun. Okay? On the other hand, Uy invested cash of 450,000, delivery truck with a fair market value of 1.2 and a book value of 1,200,000. Okay? Remember that cash, as we have said, is recorded at face value, but your non-cash assets will be recorded at fair market value. Alright? Yung book values that are given here to be 1,400,000 and 200,000 will only be recorded in the absence of any fair market value. Kasi i-assume mo in that case that the fair market value is equal to the book value. But if the fair market value is given, then it shall be the fair market value. Okay? Entry, debit cash, 300,000. Yun yung galing kay Tan. Debit furnitures, okay, with a fair market value of 250,000, also kay Tan. Okay? Investment of Tan lang pala ito. Credit Tan capital of 550. To record the investment of Uy, on the other hand, debit the delivery truck of 450, as we can still see in the previous page, and cash of 450, and delivery truck of 1,200,000. Credit to Uy capital for 1,650,000, the total of the two. Of course, those were entries, individual entries. They are not actually simple entries. Okay? Could you please make the necessary correction? Kasi simple entry nakalagay dito. Hindi naman simple entry yan. Compound entry na to. More than one debit, more than one debit. So that qualifies for a compound entry. So the correct statement here, the foregoing are the individual or separate entries which could be compounded as one. Okay? Which could be compounded. Okay? Pagsasamahin mo na lang. Cash, yung cash na kinontribute nilang dalawa, 300,000 and 450. So that is 750. Plus the furniture na galing dun sa isa and yung delivery truck naman na galing dun sa isa. Still the same, this is much more efficient way of recording the foregoing happenings.
Okay, class. So that's the bell already. That's it for this meeting. So, ganun-ganun lang, class. A few minutes of your time every day, imbis na kung ano-ano yung pinapanood mo, just make it a habit to watch our videos bilang tulong na rin dun sa sarili mong pag-aaral. Why? Kasi tatandaan mo, hindi lahat ng nababasa mo ng mag-isa ay maririnig mo. At hindi din lahat ng mga naririnig mo ay mababasa mo. Tulungan yan. So with that, see you in our next meeting. See you in the next lesson.